Speaking of the Fed, voting member Waller today made some headlines during this interview with our Steve Liesman this morning, and Steve joins us with the latest and the highlights. Hey, Steve.
Hey, good morning. Yeah, Fed Governor Chris Waller in an exclusive CNBC interview threw a wrench in this market consensus that we have. But the Fed, hey, it's going to take the summer off. But Waller said the central bank should think about, or actually could, cut rates as soon as July.
Right now, the data the last few months has been showing that trend inflation is looking pretty good, even on a 12-month basis. So I've labeled these good news rate cuts when, if inflation comes down to target, we can actually bring rates down. I've been saying this since about November of 23. So I think we're in that position and that we could do this and as early as July.
So key to his argument is that these tariffs are a one-time price effect and they don't bleed into broader lasting inflation. He says the Fed is 125 to 150 over neutral, and he does have growing concern over the job market. He noted the Fed has been on pause for 6 months, and if he's wrong about inflation, he says the Fed could just pause again after cutting rates. There was a modest jump in the July Fed futures, but it remains a long shot. Just 15% rate cut probability, up from 10. A little bit more on Waller's comments for December and September, up to about 70% probability. Both of those up just a bit. A July rate cut, very steep hill to climb. The Fed chair has said he expected meaningful inflation from tariffs in the coming months. Energy prices are another wild card. They're generally higher. And 7 Fed officials have forecast no rate cuts this year. So not everybody is on board with the look-through idea for tariffs. But another common inflation report and a more notable weakening in the labor market could make Waller's comments less marginal and maybe more mainstream come July. Guys?
I'm wondering about other reaction, Steve, how long it's going to take the president to take note of Waller's very different opinion than what we got from Fed Chair Powell. I know Secretary Bessent, I'm sure, is paying attention. He doesn't miss stuff like this. And just whether there's chatter, you know, this is a job that's going to be open next year, about whether that's what's happening here.
I'm sure this is something that got the president's attention. But, you know, Sarah, I want to throw it back at you and maybe to the panel there, if you don't mind, which is I'm troubled by the optics of all this. Let's say that the tariffs come in and do meaningfully push up the inflation rate for the next month, for the month of June. Are you really going to see the Fed cutting rates when you have a meaningful increase in the tariff rate? It seems like something to me that, hey, that's why Powell wants to wait, because the optics and the message it sends to the market about tolerance for inflation is just a bad one. Even if Waller is 100% correct, the idea of hiking when you have a half a point or 3/4 of a point added to the CPI just seems bad to me.
Well, except for the fact, Steve, that if you have more increasing evidence of softness in the labor market and you don't have the Fed cutting at that point, you know, when they're supposed to preserve the job economy, and they cut last year when things were looking like it was getting worrisome on jobs, there's that argument too. And you could see that starting to show up.
Although then you're not talking about good news rate cuts, right? That's what Waller characterized.
He literally said you don't want to wait until the job market tanks. Isn't that right, Steve?
He did say that, absolutely. And there's another piece of this, which is I've read different commentary on as follows. If you look at the forecast, Fed officials have the inflation rate going up. I think it was 3.1 for this year on core PCE, and yet they still have the two rate cuts built in. So that tells you that there is some tolerance, there is some looking through going on at the around the committee table there. I guess a big question is, are they really disagreeing about cutting rates? No. I think pretty much most folks see rates going down over some period of time. It's a disagreement over the timing, and I think another disagreement over how much faith to have in this idea of things looking through the tariffs.
Steve, our thanks. Great stuff today. And you're not done. We're going to see you at 4 o'clock on Closing Bell Overtime with Daly, the San Francisco Fed president. We look forward to that.